Hello, everyone, and welcome to our webinar on economic trends and their impact on trade with a focus on Australia. Today, we're joined by leading trade credit insurer Atradius, with some of their team joining us from over in Australia. We are also joined by Attis Credit Solutions, a specialist trade credit insurer, with their team joining us from the UK. As you might be able to tell, it is we have two separate teams in two separate parts of the world, the planet right now. So it is good morning or good evening to everyone. We'll be covering a few different topics today, including financial landscapes of key sectors, credit risks and credit risks that business face when they export to Australia, and sustainability trends and how they shape business success. It'd be really good to hear some introductions. So if we could go around, please, and say a little bit about who you are and what you do. We'll start with you, Pedro.
Yeah, sure. Thanks, Kelly. Hi, everyone. So I'm Pedro, risk underwriter at Atradius Credit Insurance, and have been working in Atradius for almost 3 years now. So I manage the Australian and New Zealand food, agriculture, and drinks portfolio. I'm originally from Brazil and have been living in Australia for the past 6 years. Back in Brazil, I have worked in finance for over 6 years. And also my family runs a dairy farm specializing in genetics. So I've grown up with a good understanding of the sector and its challenges.
And then Junie, if you'd like to go next.
Yeah, sure. Hello, everyone. My name is Junie. I'm one of the senior underwriters in the underwriting teams. I have been with Atradius for about 22 years, and a good 9.5 years of that spent in Southeast Asia. So returning to Australia early last year, I'm now in charge of the portfolio that consists of retail, packaging, paper, services, so a whole bunch of exciting portfolio.
Thank you so much. And from you now, Scott.
Yeah, so hi everybody. I'm Scott Liddle. I'm one of the client directors for Attis. I'm based in Manchester in the UK. I've been with Attis for a couple of years now, but I've worked with the team there at Attis, the wider team, for a long time. I've probably been in credit insurance for about 25, 26 years now, a lot longer than I care to remember. So I look after a portfolio of clients, which includes a number of food and drink and packaging exporters, which is why I was asked to step in today.
Amazing. Thank you so much, everyone. So we'll get started with, it'd be good to hear from you, Pedro, on the current economic landscape of the food and drink sector in Australia, please.
Yeah, sure. So, well, it's a massive sector, but I'll try to summarize some main trends. So first of all, Australia has a thriving agri-food sector, and it's one of the world's largest exporters of agricultural commodities like meat. Sales for the food and drink sector should reach 133 billion Australian dollars this year, and the sector is expected to grow 4.3% in 2025. So that's well above the forecasted 2.3% inflation. And in value terms, meat and poultry remain the largest category of total food spending, accounting for 20%, with dairy coming in second. Also, the food grocery retail sector was estimated to be worth around 200 billion Australian dollars in 2024. And it's dominated by 4 major players who control 80% of the market. So biggest ones are Woolworths with 37% market share and Coles with 28% market share. So there's a big duopoly here. It's just good to keep that in mind when trying to export to Australia. Now, when speaking of inflation, the Reserve Bank of Australia has recently issued the first rate cut in over 4 years after some positive inflation figures. And that's bringing some relief to companies and consumers struggling with debt and mortgages. Well, of course, it's too soon to feel the impact of the cut. It's only been 2 weeks now. But in the medium term, the rate cut should boost consumer spending, disposable income, consumer confidence. as well as bring some relief to leverage companies. Well, when it comes to consumer behavior, at the moment, consumers are very selective when spending on food. I think that might be the same back in the UK, but here we can definitely see that. And people are focused on food essentials, basically. We see a large part of the population dropping the name brands and choosing cheaper alternatives like home brands and more affordable meat cuts. This should change gradually as inflation eases and we get all the rate cuts throughout the year. I mean, that's the expectation at least. So at the moment, it's not hard to go to a supermarket, and see the home brand shelves empty while everything else is fully stocked. So people are really shopping around, looking for discounts whenever possible. One example is we see Australia's largest poultry producer, Ingham's, releasing higher revenue figures and increased poultry volume for this last quarter. This means some consumers are choosing chicken over meat, and fast food sales are stabilizing as well, so that's helping the industry. And also when speaking to cattle farmers, when analyzing their financials for our reviews in the sector, we see some of them shutting down their premium Wagyu beef production as they can't keep up with the higher costs and there's less demand for premium meat. Also, another big one here in Australia is healthification. So that's a big trend here, and consumers are looking at food as medicine, basically, and are looking to spend on foods with proven health benefits. So we see things like hormone-free, plant-based products, grass-fed, organic, adaptogens, nootropics, all of that, all being sought after by consumers. And interesting fact is that Australia has the largest area of certified organic land globally by far as well. And the industry has more than doubled since the 2000s. So just for comparison, Australia has 53 million hectares of organic certified land, and the second largest is India with 4.7 million hectares. So big difference there. Mm-hmm. And well, at the same time, we expect to see categories like baked goods and sugar products underperforming the sector growth as demand is not as high. So growth for these should be around 3% for the year. Well, now there's drinks too. So when it comes to drinks, sales of alcoholic drinks should grow 4.6% to 30 billion Australian dollars. And that outpaces the volume growth or just 1% as consumers are trading up to higher value drinks. Basically, people are drinking less quantity and choosing to drink better with higher quality. This trend we see should benefit especially the spirit sector. And at the same time, we see a decline in beer consumption. That's not new, actually. That's been happening over the years, especially due to health concerns and higher taxes as well. Craft beers, on the other hand, are growing more and more popular, with many brands being acquired by larger groups in the sector. Another interesting fact is a large number of manufacturers have committed up to 30% of their portfolio to zero or low alcohol options, as these become very popular as well. And of course, low carb is very big here. So most brands have low carb options when it comes to their wine, beer, etc. Well, lastly, on alcoholic drinks, we have wine, which is expected to grow around 0.5% only in terms of volume, but it's finally increasing again after years of declining consumption. White wine here is the most consumed type of wine, and imported wine accounts for only 20% of the total wines in the country. Well, lastly, we have non-alcoholic drinks, and spending on non-alcoholic drinks should grow around 3.3% to 9.35 billion Australian dollars. This growth should be mostly driven by hot drink sector. And well, I think these are some main trends we see, and we're happy, if you'd like to know more on a specific subsector, we welcome everyone to send some questions later as well.
Thank you so much, Pedro. That was perfect. Yes, just on that, this is a pre-recorded webinar, but any questions you have, feel free to get in contact with any of the team, or please put into the chat box and we will make sure to get back to you. Junie, it'd be really good to know if there are similar sort of growth trends in the paper and packaging sector, or if there are any key differences that businesses should be aware of.
Yeah, sure, Kelly. So when it comes to paper packaging, we're talking about Australian market growing year on year as well. So CAGR is about 4.2% that we're looking at this year. So that's on a market of $6.6 billion worth. So that means by 2030 we are good to hit over $8 billion. So, and Australia, one of the interesting thing is that it's one of the fastest growing packaging markets in Asia Pacific. The market size we're looking at is around 160 billion. So Australia is still not that large, 3.3% or so in Asia Pacific, but it's one of the fastest growing, especially when it comes to paper packaging. You can't not talk about sustainability in Australia when we talk about packaging. So this market growth is also on the back of increasing consumer awareness of sustainable options, like Pedro was saying, and also a lot of regulations and that's imposed by some of the government agencies and environmental protection agencies. So we are all for environmentally friendly packaging products. So, and one thing to keep in mind is Australia is moving quite fast towards a circular economy to be completely, end up as a circular economy. So that means reduce, reuse, and recycle. It's all about minimizing wastes and also making it all efficient and easy for recycling options. What that means is that, so like I was saying, just taking a small step back, the three prongs push towards this paper packaging is good news for manufacturers overseas as well. So stricter regulations from different levels of governments, and also a lot of investments in innovative technologies and research and development for green options. And lastly, the shifting in consumer preference. So businesses that meet these demands, it's going to be on the right track to deal with Australia. So out of all that, I'd like to talk about corrugated boxes. Corrugated boxes been around for a long time, obviously, but it's gaining a lot more popularity nowadays because of their versatility in size and shape. We're getting very creative now in terms of reducing environmental impact by reusing it, in different ways. Also, because of the materials are a lot sturdier and their strength and also printability, it's such an attractive and valuable choice for many applications. So manufacturers should keep that in mind as well. One more rising trend we're noticing now is printed electronics technologies like QR codes on them. So we call it smart corrugated boxes. That on itself seems quite simple, but it adds quite a lot of value along the supply chain. So the value chain, it enables vendors to track shipments. That means also more customer enhanced product information through QR codes, and also even at the recycling facilities where these the recycle, it's all trackable. So it's in line with eco-friendly packaging movement, if you like. So it's just not a trend anymore. It represents actually a fundamental change in how how the products are packaged and marketed and consumed. So that is all about, I could keep talking about technology advances towards the corrugated boxes, but I think it's I've emphasized enough on the importance of how to keep sustainability in mind and circular economy movement. Yeah.
Amazing, thank you so much. Yeah, it'd be good to kind of touch on the interdependence of the two sectors. So how the economic health of the food and drink sector and the economic health of the paper and packaging sector kind of intertwine. So it'd be good to hear from you about that, Junie. Thank you.
Yeah, absolutely. I mean, it's two sectors that go hand in hand. It's like a little bit like a marriage of our two sectors as well. You can't just ignore the other sector in terms of trends and also, challenges that the other sector's facing. So especially with food retail industry expanding, we will see a greater need for packaging materials to, accommodate higher volumes of products. And again, sustainability focused, of course, and recycling. And one more thing is we have a lot of emphasis on the measures for safe food packaging as well. And I think Pedro can touch on it a little bit later in terms of some of the regulatory requirements as well. Biodegradable options. When it comes to flexible food packaging, especially, the forecast is about, the rise of flexible food packaging. What that means is increasing consumer demands for convenience, and as well as at the same time, the industry push for sustainable and shelf-ready product design. So a lot of investments from private and public sector into research and innovative, packaging, and of course, co-branding and marketing. Co-branding and marketing between the two sectors been, a huge emphasis for a lot of the businesses to consider. It's because packaging is often seen as an extension of branding in a product, especially for food and drinks. And so healthy food alone, if I have to put it in the simplest form, is no longer stands as a strong choice point for consumer in mind. So it's got to be married up with biodegradable packaging. Then it makes sense for consumers to keep that identity and behavior that they really like to adopt. Yeah.
Thank you so much, Junie. Yeah, as you were saying, sustainability is obviously a massive importance in businesses worldwide. So it would be good to know from you, Pedro, some sustainability regulations surrounding the food and drink sector, please.
Yeah, sure. So let's start with the big one, which is the single-use plastic ban. So it seems like Australia will not bring back plastic straws like Trump did back in the US. So we're sticking with our paper straws. And since 2022, Australia has started its single-use plastic ban, which means banning most, plastic bags, cutlery, and other food containers for business and organizations. So just to give you an example, the latest ban for the state of New South Wales includes those plastic straws attached to juice boxes and plastic spoons sealed within the packaging. So one thing to keep in mind is that the ban is different from state to state. So companies looking to export to Australia should keep that in mind, research ahead. Some apply on federal level, some on state level. Another big one is the greenhouse gas emissions reporting. As of January 2025, Australia requires major companies to report their greenhouse gas emissions. And this mandate will expand in 2026 to supply chain participants as well, such as farmers, transportation companies, etc. So suppliers may be indirectly pressured to provide emission data, and that might increase admin work at first. So these smaller companies will also be required to report from July 2026, and this will be gradually rolled out. So they're going to start with the big ones, then medium, and then small companies. And well, when it comes to sustainability, at the same time, companies ahead of the curve receive a lot of praise from Australian consumers. So we had a recent case here that showed blueberry farmers in Western Australia selling their berries in compostable cardboard punnets instead of the famous plastic ones. So the farmers said they were happy to absorb the cost because it was something they felt strongly about. And funny enough, they had this idea when they were living in England for 6 years. When they came back, they realized how difficult it was to avoid plastic when buying fresh produce in Australia. So we're saying that, the farmers were rewarded with a lot of praise from consumers, got a lot of attention on the news. And the case also shows that UK exporters might already have a sustainability edge, let's say, when it comes to packaging and exporting to Australia. The other thing we see, of course, is the increase in compliance costs. And since these companies need to adapt to all these new regulations, find new suppliers, packaging options, etc. I think the main lesson here is if you're looking to export to Australia is research ahead. These regulations are always changing, expanding, and remember the rules can vary a lot from state to state. And as I said before, orders are implemented on a federal level. And just another interesting fact is that 70% of rejected food imports that come into Australia are rejected due to labeling issues. For example, things like complete ingredient list, nutritional information lacking, or important details. So yeah, I think just remember to check the Australian New Zealand Food Standard Code and to avoid these types of issues as well.
Thank you so much, Pedro. So over to you, Junie, about how the paper and packaging sector is affected by these sustainability trends.
Yeah, we'll be talking about the very similar trend, actually. Like Pedro said, the bans on problematic plastics, it actually encourages businesses to think outside the box that we haven't done so before. And compostable options are gaining a lot of popularity as well. In terms of the some of the circular economy initiatives that are fully supported by the government is programs like Australian Packaging Covenant Organisation, so APCO. APCO has very ambitious national packaging targets. For example, by 2025, which is this year, the whole nation's aiming at 70% of plastic packaging being recycled or composted. And also at the same time, what we're looking at is 50% of average recycled content included in packaging. So, it's quite ambitious when it was first set up in 2018, and the target's still a little bit behind, but we are still heading to that direction without any sort of backtracking or anything like that. So it's important for exporters to Australia to take that into account as well. One more thing is the targets, the 2025 targets. It might be a bit more ambitious than originally planned. One of the top targets, 100% of packaging being reusable, recyclable, or compostable. So that's where we're heading. Australia is, later down the track, you'll see it. So what that means for businesses is that innovation requiring upfront investments in R&D, technology, but for the long-term trade-off. Food companies adopting these sort of innovative technology in packaging will definitely be gaining a lot of customer loyalty. And there are a lot of plant-based plastics or edible or just disposable packaging also coming through to the market. But I think in terms of edible packaging, it's a lot more risks to take because it textures and smell and taste and all that. Consumers are still taking a little bit longer to get used to. But what we're seeing now is coffee cups. Australia is one of the nations that love that cuppa in the morning. So coffee cups, we are seeing a lot of a wider adoption, if you like, of compostable coffee cups and food containers as well, for that matter. So certifications like home compostable. So there are certifications that we issue as well. So if you have that certification on your packaging, it's becoming more prominent, and customers, they don't mind paying a little bit more to do the right thing. We're such good, we have such strong do-gooder consumer behaviors in Australia. And for brands, what we are increasingly seeing is less is more. What I mean by that is creating sleek and functional designs that prioritize recyclability over aesthetics. So less print and simple mix of chemicals so that it doesn't sabotage the recyclability of these corrugated boxes, if you like. What we're just talking about is mono-material laminates and coatings and, you know, single material films that can be easily recycled curbside. And also simple cardboard boxes with minimal printing, like I was saying, and no plastic linings, gaining a lot of traction here. So another rising trend is refill stations are everywhere now in supermarkets and retail outlets. So big brands like Lush and Aesop and some of the milk supplies even have a refill bottles and refill stations for a discounted price. So that's becoming quite an initiative as well. So adopting these practices, it may require initial investment and adaptation, but for the long-term benefits, that's going to be absolutely amazing for businesses, because you're getting consumer loyalty. We're very eco-conscious here, and you're gonna tick the box when it comes to regulatory compliance and also market differentiation. So what I'm trying to say, all of that for is sustainability is not a nice to have anymore. It's a necessity for businesses operating in Australia.
Thank you so much, Junie. So we're moving on to the next section now. We've covered sustainability trends, economic trends, and what businesses should consider when exporting to Australia. So now it'll be over to Scott, who will be explaining the role of a trade credit insurance broker.
Yeah, I will just like to say thanks to Pedro and Junie first. That was really interesting. So yeah, role of a credit insurance broker, I would say first and foremost, it's to understand the intricacies of the market, and on from that to have an in-depth understanding of our clients' businesses and what it is they're trying to achieve. Because once we understand the client's business, we can then use our expertise to design, negotiate, and implement a credit insurance program which is tailored to their requirements. Because we're independent, we have access to the entire credit insurance market, which is around 12 insurers. But we also work with UK Export Finance and with the Lloyd's market. Trade are obviously one of our key partners, though. So once we've put a policy in place, it's our job to ensure that the clients maximise the benefits of the programme. So we work closely with their credit control team, the sales department. We support the client with training, day-to-day policy operation. On from that, we would help the sales department to identify and qualify new potential clients. So all the time we're working to make sure that the cover is maximised, which would be speaking to a tradius or their equivalent risk teams, to make sure we've got the credit limits to where they need to be. And then if the worst comes to the worst and there is a claim, then we're there to support the client through that process as well. So, throughout the year, we'd be having regular meetings to make sure that the policy, evolves as the client's business evolves. Come renewal, we'd remarket and renegotiate to make sure that the package that they've got in place is as good as it can be at every moment in time. And I suppose finally, I would add that, the credit insurance market does evolve, although it feels that it's slow at times. So it's our job to keep pace with those developments so that we can make sure that our client, they know all the options available to them at all times. And that's it really, Kelly.
Perfect. Thank you so much. So as we were talking about exporting and sort of moving into Australian markets, how does trade credit insurance help UK businesses, for example, when entering the Australian market?
Yeah, I mean, I suppose first and foremost is intelligence. You know, as with most things in life, information is key. So when you're exporting, especially if you think about a business in the UK exporting to Australia, which is the other side of the world, you know, it's really quite difficult for them to get financial information on the credit worthiness of the companies that they're looking to trade with. And each export market comes with its own intricacies. Insurers like Atradius hold vast amounts of financial information, a lot of which is live and outside of the public domain. At Attis, we do a lot of work in obtaining financial information that the insurer might not have, and then facilitating that flow through to them. Having cover on your sales ledger, that really gives you the confidence to trade. So if a company's financial, if one of the businesses you're trading with, if the financial position deteriorates or improves, you know, if your insurers are trading, they're going to be letting you know about that. And if the worst thing happens and the company you're trading with fails, then a trader is going to step in quickly to get that cash flow back into the business in the form of a claim. We see a number of exporters that utilize something, you know, finance funding, so something like invoice discounting. So having credit insurance in place can really help there, because the funder will fund to the level of the credit limit that the insurer is offering, and they'll often do that at a more competitive rate because they know that obviously the debt is covered. From a sales point of view, we can get tailored marketing lists with pre-approved credit limits on there. So if you've got a sales team looking to find companies to deal with in a territory, especially if it's a territory that they're unfamiliar with, that can be invaluable. You know, there's a lot of time saved there. That, you know, they're in your sector, they're the companies you need to be dealing with, and you've also got the credit limit pre-approved. And I suppose finally, I would say collections. I've got quite a bit of experience of clients of mine that utilize Atradius collections and other insurers collections, and they find that when they're exporting, that's really invaluable to them. It's, as anyone knows, it's anyone's tried to collect a debt from the UK to say Australia, it's really quite difficult. It can be expensive, time consuming. And the good thing about a lot of the in-house collections is that the cost is indemnified by the insurer. So the cost to our client at the end of the day is minimal.
Thank you so much. So you've touched on it a little bit there, but how does Attis work in conjunction with Atradius in this kind of scenario?
Yeah, I think, as I said, you know, Atradius are one of our key partners and have been for a long time. I mean, I've been working with Atradius since the first day I started in credit insurance, really. But again, I would say it all comes back to information. So it's our responsibility as the broker to make sure that Atradius or whichever insurer we're dealing with, that they understand the needs of our client. So again, it's all about us facilitating that flow of information so that Atradius have got the right information in front of them so that they can build a program that supports our client. Attis are also part of the GTCA, which is a global broking network. So there's quite a bit of experience we can draw on there since Brexit. We can't partner with everybody in the same way that we used to following Brexit. So GTCA has been really helpful for us. If a company is exporting, I would say there's a number of factors that they need to consider. You know, some companies might be comfortable taking the odd financial hit, but I would say, why? Credit insurance exists. Why not look at it? So, I mean, there's several reasons someone might not pay. Insolvency speaks for itself, and default. By that, I mean, you know, where insolvency cannot be proven, but a debtor's not paying. And on from that, political risk is often quite overlooked when it comes to export policies. But it may be that a political event happens and the government of that country or quasi-government, they stop payments from leaving that country. It's unlikely to happen in Australia, but it's worth knowing that that kind of cover is available on an export policy.
Thank you. So it sounds a lot like you're speaking from like experience, as if there are clients that have gone through this before. Do you mind explaining if we have any existing clients in this?
Yeah, we have quite a few actually. I mean, there's obviously within Attis, there's various client directors that have their own portfolios, and obviously I know what's included in mine. And when I asked the bigger question of what we have elsewhere, I was quite surprised at how many we have actually. So we are speaking from experience, and we do understand the challenges. But I think from the clients that I deal with personally, I think they've found credit insurance to be really invaluable when it comes to exporting. We've seen firsthand how quickly situations can change. And as I mentioned before, political risk, that's often an area that's overlooked. And that's, what if the debtor has the ability to pay, but the government might just be stopping funds from leaving the country? There's nothing that they can do about that. We saw this probably most recently was in Lebanon, so not that long ago. I mentioned collections. Again, Atreides collections have been great for some of my customers. They take a lot of comfort knowing that the cost of collection to them is minimal, that there's local people, sort of boots on the ground, as is what I'm trying to say, because Atreides have risk offices and collection offices. In fact, I think, am I right in saying that Atreides Collections is now the largest collections company in the world? So there's collections offices all over the globe, which means that they understand, local customs, that kind of thing. So yeah, as I said before, knowledge is key. I think that's it really, Kelly.
Fabulous, thank you. And just before we close up, Scott, if there was a company that was kind of thinking about like what are the first steps in their sort of journey to export into Australia, what advice would you give them?
I would say engage probably initially. So sit down with us, have an initial meeting. We need to find out what type of goods you're exporting and into what markets. That should be really the starting point of the conversation, and then what it is you're looking to achieve. What payment terms you're operating on. Is this funder driven? Are you looking to get credit insurance in place to help a funder provide the funding for you? And then, what type of businesses are you looking to target? Is there anything that we can do there to help you build sort of targeted lists? So again, and then it's really going out to the market, approaching the different insurers and trying to get an insurance partner on board that kind of buys into what you're trying to do. And then it's just really fine-tuning a package that works for you as a business then.
Thank you so much. So that was really good to hear from everyone there. Like I said earlier on, this is a pre-recorded webinar due to the time difference. But if anyone did have any questions at all, we will be able to get back to you. Our speakers are contactable as well. Or if you put them in the chat, we will be getting back to you. And thank you so much to all of our speakers today, to Pedro, Junie and Scott. We've covered the economic landscape of the food and drink sector, paper and packaging sector, and how a specialist trade credit insurance broker can help in exporting to Australia. It's been really, really lovely to hear from you all. And thank you so much to everyone who joined us today.
Thanks very much.
Thanks,
Thanks, Kelly. Thanks, Scott. Thanks, Junie.
Thanks, Pedro. Thanks, Junie.
Thank you.
Thanks, Kelly.
Have a great day.
Thank you, you too. Bye-bye.
Bye.